Okay, all right. Well, let's welcome Dipan Mehta, Director, Elixir Equities, who joins us on the show. Morning, Dipan. Good to see you in as always. What do you do with a company like Indigo Aviation? Gradually, at least from a customer perspective, things are actually improving on ground. Number of flights that are taking off at least. But as a shareholder, what would you do? Or someone who wants to be a shareholder, do you think it's come to those levels that you want to get in? Or are you expecting this to get far more prolonged?
Nazir, good morning and thank you for having me on your show. We are shareholders of Indigo as a measure of disclosure, so we feel the pain of the stock price correcting and also sympathize with all the passengers who have been disrupted by this particular event. But look, end of the day, emotions aside, this is the largest aviation company in the fastest aviation market in the world. It's got a fabulous capacity expansion plan. 30% revenues now come from international flights, which, by the way, are not affected at all by the DGCA order. That ratio is expected to go to 40% in a couple of years or so. And end of the day, after this event is over and done with, they will still have quite a strong market share and adequate pricing power. All input costs remain pretty much stable. So I'm very positive on Interglobe Aviation. As I said, we are shareholders. And if I may just add that in FY24, this company made a net profit of 8168 crores. And I expect that in a kind of a steady state position, it can generate profits of 11,000 crores. And at 1,85,000 market cap, the stock is now trading at about 18 times what I think is its profit potential, which I think is extremely attractive for a business of this type and this size, as also the fact that it is the best play on travel and tourism within India, which is on a secular growth momentum.
Is the cut in revenue guidance shared by the company in line with the estimates that you had? You would be looking at the numbers very closely since you own it. Is it in line?
See, Rima, I don't track the numbers on a quarterly or even annual basis. I just see the profit potential. And I think that I don't know when they will make 11,000 crores profit, but if they made 8168 crores profit in FY24 and thereafter they made considerable progress in terms of new routes, in terms of international expansion and capacity addition, is just a back of the envelope calculation that they can do 11,000 crores. And I'm also would like to add that the next 2 quarters will be brutal. I think December quarter will be bad because of these disruptions as well as rupee depreciation. For every 1 rupee drop in the rupee against the dollar, they lose about 900 crores or so. So next 2 quarters will be extremely challenging, and this stock is not for the weak-hearted. It can go down further even from these levels. It's always been a volatile stock, but look at the bigger picture. If you have a 3 to 5 year type of a view, the returns can be pretty decent as they have been until this particular event took place.
Okay, all right. Let's see if this one finally starts to stabilize a little bit. Dipan, morning. It was Keynes earlier, PG Electroplast. There were a few others which sold off, and yesterday was Dixon, which was down about 5.5%. Just your thoughts on Dixon or the space in general?
See, I think that Keynes, I'm not tracking it that closely, and I need to understand what exactly is the issue. Because we don't own shares of Keynes, so don't track it as closely. But I think that it will sooner or later come into a sweet spot. And we've seen companies go through this turmoil, in terms of corporate governance, disclosures, and other challenges which kind of result in a crash in the stock price. But in my experience, if the basic underlying business momentum is good and the management, comes out clean and makes adequate changes going forward, then pretty much we see recovery of lost ground, and that may play out in Keynes tech as well. As regards the other EMS players, be it PG Electroplast or Amber or Dixon, I think it's just a spotlight has come on the valuation of these companies. No doubt growth rates have been good, but investors feel that they are perhaps overpaying for this particular businesses. And that's what we are seeing over here. But I remain invested in Dixon is one of our largest holdings as a measure of disclosure. And we remain pretty confident that at least the company's returns will be in line with the growth of the profits. So very positive on the sector. And it's good that from a long-term investment perspective, the P multiples have compressed. At some point of time, they will attract a lot of value investors, or at least investors are looking for growth on a serious basis.
You've been invested for a long time, or you've come in after this correction? from 18,000 levels?
Dixon has been like 3-4 years. So
Okay, so you've seen the...
see what happens, Prashant,
yeah.
is that what happens, let me tell you, as an investor, if your purchase price is really low, then these 15-20% fluctuation or drop doesn't really affect you because your cost of acquisition is low, and it's easier to manage such corrections. But if you're looking at a actual loss when you bought the stock by 18-20% or so, then that can get quite unnerving.
No, absolutely, and of course, I mean, it's for recent entrants, it's a pretty sharp loss, right? Almost 19,000 rupees, and it's in the 12,000 handle now, in that sense.